Silver markets just hit an all-time high and it's absolutely crushing, but it's what's deeper that is actually sending a major warning to the market. Silver, when it runs like this, it is a leading indicator for the potential of a recession. And I'm going to tell you what I believe silver is showing to the entire market. But first, we've got to dive into this historic generational run that silver is currently on, where it extended its gains to a record $71 an ounce. It's up 150% in this year to date. Literally one of the most historic runs in precious metals history. I mean, this is insane. Look at that green candle. It is something that we have never seen before. It's currently sending several warning signs, though. Their extreme volatility and overbought silver positions surged to multi-year and even record highs. There's physical market stress as well as supply deficit as well, which I think is very interesting and something of note here. I mean, one thing that silver and all of these precious metals, obviously the property that it all holds, is the scarcity aspect and that hard asset of all of this. So what I think is very interesting is just how the silver market is reacting, because generally speaking, precious metals seem to rise up and do extremely well during a potential of a recession. Now, when silver does literally crazy things, we see a few different things, right? It's the gold to silver ratio usually provides early warnings for an early US recession. And it's done that since like the 80s. In 2007, the ratio was at 45 to 1. And then it soared to 84 to 1 during the 2008 crisis because gold was that safe haven demand. So that ratio just spiked sharply. And early this year, the gold to silver ratio rose sharply, crossed that 100-ounce level, and was very similar to the movement that preceded 2008 and the 2020 crisis. Both cases, the ratio started moving rapidly upwards before the crisis hit. And in August 2008, they preceded the Lehman collapse a month before, and it came in February 2020, right before the COVID crash. So we're seeing this absolutely rip right now. And I'm not saying that necessarily we'll see a crash here in January, but it's definitely showing a major warning signs and similarities to what we saw right before the 2008 and the 2020 crash. Then, of course, we've got the supply deficit story as well, which the supply and the production has fallen to 800 million ounces behind the global demand, which is absolutely crazy. It's been dramatic in 2025. The price is hitting all-time highs, and it's posted a 67% year-to-date gain by November 6th. And so now it's up 150%. So literally since like early November, it's more than doubled, which is honestly like unprecedented. So what does all this mean for the broader economy? Well, it's unique because it's like a 60% industrial metal and 40% monetary metal. So the dual nature has, some sort of, let's call it, double meaning with all of this, right? So the warning that this is sending to the entire market is that there's no way you can interpret these exploding gold prices as a good sign or a warning sign, right? It's a case to be made with all of this. So during recession, where real interest rates expect to move sharply lower, monetary demand can offset with weaker institutional demand, and silver prices are outperforming gold. Well, gold is also doing very well as well. So the silver's dual role as this industrial metal, its investment demand has faced conflicting forces in 2025. The recessionary fears and global political tensions support portfolio diversification, and it shows weakening global economics. Economics worsen, and their demand prospects obviously, change. But according to Chris Vermelin, he says we're seeing simultaneous selling pressure across from diverse asset classes. It's typical signs of a fundamental reassessment of global economic conditions rather than an isolated sector specific concern. So it's interesting with all of these guys, right? Because they're saying, hey, this gold to silver ratio, right? Something we got to watch. And, this could be the early warning signs because in 2007 to 9, that's when we started to see this gold to silver ratio absolutely shoot up. And, after we see that, then we'll start to see, how these outsized returns will start to, I guess, show here. So it'll capture by silver's 400% rally by 2011, right? So as we're going to start to see silver and all of these things, you got to ask yourself, you know, are these things going to be in a recession? Is the silver actually going to outperform? Is this showing signs of an early recession? Because, I think it's tough to tell because of how little we've seen from the physical market. And that's where I think, this biggest aspect of silver is that, not only is silver, a precious metal similar to gold, all of these different things that make it a good investment, but it's also that industrial metal that is required for many different things. All of the technologies that we have here use some element of silver. So it's not just, all right, well, we're going to go and, you know, load up on our silver bars and hold them forever. No, no, no. It's something deeper within all of this when it's really going on. And, what I think is unique is, we're seeing silver perform like it is. And then, you look at the interest rate environment, and everybody's been saying essentially that the interest rates are, you know, something that need to be cut and drawn down. We need to put more liquidity in the market. But if you look at this today, we only have about a 14.4% chance that we'll actually see interest rate cuts at the next meeting. Granted, the next meeting is in 36 days, just about. So that meeting, we can see, let's say we'll see, potentially some big changes and some big swings. So I think, you know, what we could potentially start to see is, hopefully next year we'll start to see a little bit better of a dollar, right? I mean, this year to date, we literally had a negative 9.8% move in the Dixie overall for the dollar. And I'm just curious, how is the Dixie historically doing right now? So right now, as in December 2025, let's see what they're saying here because it's trading multi-year lows down significantly. Last time I was looking, it had the worst year to date since 1973. But, with government shutdowns, the monetary policies, there's various economic factors. Everybody's looking at the US debt and saying, hey, the Dixie not doing so good, and we shouldn't be cutting interest rates, which, I tend to agree. I think we need to keep some pressure. And when we see the S&P 500 floating around all-time highs, I mean, I think you've got to watch, how all assets are doing, not just the S&P 500 and the Dixie. I mean, when you see things like this out of the silver market, it is not signs that, it is a healthy economy. And I think, the craziest thing that we're starting to see as well, and another reason why interest rates might actually just need to be cut, is because the interest rate cost is going to double over the next decade if we don't do it, right? Because the public debt potentially can get to 2.2 trillion, over the next decade. It would be a 127% increase from the 97 billion recorded this year, which is insane. So we need to cut interest rates for that reason. But the problem is that the dollar is showing massive amounts of weakening. And, as we're starting to see it, right? Silver's up 150%. Where meanwhile, the S&P 500 year to date up 17%. I mean, I don't know if we've ever seen a divergence. I guess it's not a complete divergence because, the S&P 500 is still doing well, but the differences between silver up 150% and the S&P 500, the best 500 companies in the world. I mean, even if you just take, Tesla and some of these others, silver is crushing them. So it's a major warning sign to the market with how, the precious metals are playing out. But, you know, what we are seeing too is a divergence in the S&P 500 and the Nasdaq 100. The divergence is the lowest it's ever seen in 23 years. The low implied correlation means that stocks are expected to move independently rather than rise and fall with broader markets, which is very interesting, right? Because we've been so top heavy. We've been in a place where essentially we've seen, the Mag 7 carry all of these, carry the stock market for quite some time. And, I've been talking about silver this whole time, but gold has not been slouching at all. It's a now $31.5 trillion asset, 7 times larger than NVIDIA. That is insane. I mean, when we see these green candles like this, it is absolutely shocking. And it's obviously, the precious metals are sending a major warning to the market. I mean, when you see these price surges up like this, you have to be very, you're not going to be jumping for joy. Sure, maybe Peter Schiff is out there happy with seeing the way that gold markets are really performing super well and potentially being a safe haven asset. But when you break it all down, gold performing like that is not necessarily a positive for, the overall market, right? So, I mean, yeah, speak of the devil, here's what Peter Schiff is saying. Gold above 4,500 for the first time ever. Silver trading at a new record high. Investors who miss out on this bull market do not do so at their own financial peril. And he's saying it's still early, that they're actually going to keep pumping, which is crazy to me. So I'm going to be covering all this. Make sure you guys are subscribed. I see we got 3+ of you guys here in the chat. Make sure you guys are smoking that like. Blow up the chat for me next time. Thank you guys all for tuning in. Tell a friend to tell a friend, and I'll see you guys out to the next one.